just kind of moving along to just, I know we're a little bit short on time now, but some of the more important points that we need to kind of hit on, and that is essentially how does Bitcoin fit into a person's investment portfolio and what weight should one consider? Because I've seen both sides. I mean, I've literally had clients approach me that have said, why don't you put all my money into Bitcoin? Because there's just nothing better. So that would be what we call a Bitcoin maximalist, let's just say. And then I have other clients that basically say that they don't want any Bitcoin at all. I mean, we all have and of course, everybody's risk tolerances and goals and objectives will be different. But I think you touched on it earlier. There is a risk to not owning any Bitcoin because if we keep having some of the macro issues and the fiscal issues, globally speaking, with at different governments, including Canada, you might regret not owning Bitcoin potentially, 5-10 years from now. Having said that, if somebody has maybe too much money in Bitcoin, they might experience maybe more volatility in their portfolio than they can reasonably handle. So do you have any thoughts on just how Bitcoin fits inside a well-diversified portfolio of stocks, bonds, commodities, and then of course Bitcoin and cash?
I certainly do, and maybe this is a helpful slide here to take a look at. This is how Bitcoin works as an asset. These are the annual returns of Bitcoin versus a bunch of assets that we were tracking here. So we've got gold and commodities, Canadian bonds, equities, and prefs, and so on. You can see the list there on the left-hand side. And what's happened here is you see a behavior that is tied to the 4-year cycle that Bitcoin has historically exhibited as a result of its supply schedule. For 3 years in a row, Bitcoin is typically the top performing asset, and then in the 4th year, it's the worst performing asset. And this is why
see that on the chart.
Yeah, and people say, well, it's too volatile for me to hold. And it's like, okay, well, yeah, it is volatile. And we could talk about that in answer to your question about how to use it in a portfolio. But if you have a look on the right-hand side, the average up year over this period was almost 1,000%, but the average down year was 65%. Yeah. And so for an asset that has that much asymmetry between its up years versus its down years, I find it very, very attractive, because if I can survive the down years, I have a chance to do very well on the years when Bitcoin is rallying. And so, take some recent history. In 2022, it was a bad year. It was down 63%. But the following year, it was up 153%. So if you simply bought December 31st, 2021 and held to December 31st, 2023, you had it was a roller coaster ride, but you actually had a good return. And you had a return that beat pretty much everything else. So you have to think about, okay, how am I going to live through that volatility? And the answer that we believe is best for most people is make sure you have a small enough amount that when you have a drawdown of 60% or 70%,
right,
you're okay, you can still sleep at night, and you won't sell your position at the lows. You'll stick with it. And maybe if you're on a rebalancing at the lows, you'll stick with it at the lows. And if you're rebalancing your portfolio, you might even add to it because you've sold your winners and you're buying your losers. That's what rebalancing is all about. And that allows you to stay in so that when you have the big up year, you really enjoy the gains. And so for everybody, that's different. We hear people saying, well, 5% seems like the appropriate number. I think it really depends. Maybe if you're younger, you can go higher than that. If you're in need of money soon because you're buying a house or something else, you might want to draw that back so you don't have, because you don't know when the volatility comes. This chart makes it look like you can mark your watch by when the up years and down years happen.
It does, doesn't it?
Yeah. I really regret that feature of this chart, because while it is true the cycle has repeated quite regularly, picking the exact moment and the exact price at which the turning point happens is I believe, completely impossible. So it's, again, back to that old adage, it's time in the market, not timing the market. And you want to make sure you have enough that you can enjoy the upside, but not so much that you struggle when you have the downside. And then if you can ride this wave over the long period of time, you're going to be quite successful, and it will add a diversifying element to an otherwise well-constructed and diversified portfolio. We really think that's the name of the game.
Yeah, and just to kind of summarize this chart, I mean, in most years since Bitcoin's been in existence, Bitcoin has been the top performing asset class in the world. But that every fourth year looks like it's the worst performing asset class in the world. So usually it's the best, sometimes it's the worst, and it does seem like that occurs every 4 years. My understanding is that revolves around something called the halving cycle, and that halving just occurred, I believe, this past April of this year. And that usually means, when the halving occurs, that's kind of right almost in the middle of the up cycle and the uptrend. That usually might last another year and a half or so afterwards. Any comments on that at all?
Yeah, I actually have a couple of slides on that if I could, because I think the trend in the halving and the cycle is an important element of Bitcoin that investors should be aware of. So what happens in a halving is the amount of new Bitcoin created through the mining process that's securing each of those blocks is cut in half. This is how you end up with 21 million eventually. The 21 million, we won't get there for another 100 years. But right now we're gonna get to 90% by the end of this block on the right hand side here, where the line says halving 5. At that point in time, we're gonna have 99% of all the 21 million will have been mined. Okay, so there's almost no new amount of Bitcoin. But what happens is every time there's a halving, it means that each new block releases half as much Bitcoin as prior to the halving period. And it's caused the price to run in these patterns. And so right now we're 3% into the new epoch. The last halving happened a couple of months ago, as you said. It went from 6.25 Bitcoin for every new block to 3.125 Bitcoin for every new block that's mined. And that's what the miners get. So pretty significant drop, 900 new Bitcoin a day to 450 new Bitcoin a day. And to put it in context, by the way, the US ETFs that launched in January are buying anywhere from 5 to 10 times the amount of newly mined Bitcoin each day.
Yes.
So you have significant increase in demand, and the fresh new supply dropped in half. And that price dynamic is I think going to be an important element of where the price goes over the next little while. We are in a very normal period following the halving. The price has gone sideways, roughly sideways since about March of this year. That's like what happens at the beginning, as it has in previous cycles. You always see a little bit of a blip, and then the halving in April, we've gone sideways. It's a great time to accumulate. As you can also see here in the cycles, somewhere between 12 to 18 months after that halving, the price starts to move up. And that, I think, has a lot to do with the dynamics of how much new Bitcoin supply has come on the market versus how much has been bought up over that period of time. And so the lack of new supply means the price goes up for people to continue to adopt the investment and participate in the network. Now, there's another slide. Forgive me for this. It looks different than most price charts.
I haven't seen this one before.
Slide.
Yeah.
So this shows the cycle as a circle. Okay. So one trip around the circle is 4 years. Okay.
Okay.
And the rings of the circle, like rings of a tree, they start at 1/100th of a penny in the center and go out to 1/10 of a cent, $1, $10, 100, 1,000. And they're increasing by a factor of 10 each time. Okay. And what we've seen is at the same point in the cycle, the price has never dropped below where it was at that point in the previous cycle. So right now we've been in this zone between $10,000 and $100,000 per Bitcoin. The next zone is $100,000 to $1 million per Bitcoin. That's the next layer of the ring of the circle moving outwards. And that ring is we should not stay. If we stay where we are, we will intersect with the previous price at some point during this cycle. So that hasn't happened before. So this is to show that as there's more adoption, the price tends to increase, and these circles continue to go around outside without touching each other. So the next band is $100,000 to $1 million. We're in the $10,000 to $100,000 band right now. I really like it. A lot of
Wow.
people who are Bitcoiners really like this chart. Um, how long will it persist? We don't know, but it does stand to reason given the behavior that this is how it works, and which is why a lot of times we look at logarithmic charts when we look at the price of Bitcoin because
I
it's
do.
we
Yep.
view it as an exponential asset. It's not a linear asset.
Mhm.
It's easier to think of in those terms, especially as the dollars get bigger. And I was having dinner last night with some people, and they said, what's my prediction on the price of Bitcoin? Do I think it will get over 100,000? And I said, yes, I do think it'll get over 100,000 in the next couple of years. And I think once it does, it might even go over to 200,000. And they started to laugh at me. And I said, okay, guys, but when I bought Bitcoin in 2017, it cost $4,000. And if somebody had said at that time that it would be worth $70,000, we would have all laughed at that person. And
Yeah.
so, your mindset can shift. And so I'm not making any promises. I don't know where the price is going. I'm just saying that it's worth zooming out and thinking about what's possible and not being constrained by the price that it was at 4 years ago or 8 years ago, because Bitcoin has a history of surprising people.
I've never seen this chart before, but this is actually brilliant because it's the only way to kind of show that if you mark Bitcoin of where it was in the exact spot in the previous cycle, it's always further out the tree. So it's like, you're right, it's like a tree that's creating additional rings as it ages and as the halving cycles progress. And like you said, it's not necessarily predictive. I mean, you never know what's going to happen in the future, but certainly it has a history then from the very beginning of always growing rings as it progresses 4 years out every single time, and it's never crossed. So yeah, it does make me think of where it's going to be in a year and a half, or 5 years, 10 years. I guess we'll have to wait and see.
Yeah.
But
Yeah.
but it is quite exciting. And just to kind of summarize, I mean, at the end of the day, everybody has to, decide, if they wish to own it, and if they do wish to own it, how much they wish to own. I do agree with you that I think, and I mean, there is no average person out there. I hate to define an average person, but I always like to think that for the average person who has a portfolio and can assume some level of risk, that maybe already owns equities, already owns commodities, and has some risk capital, even real estate in their portfolio, that having somewhere between 3 to 5% Bitcoin, for most people would be tolerable. In that even on a down year, it's not enough at risk to really completely upset the apple cart. But it's still enough that if when you get into these up cycles, that say 5% becomes meaningful, and it adds meaningful gains to your portfolio over and above what you would otherwise experience. So now, and we touched on this a little bit, but I mean, in terms of, and again, this goes back to why we're even doing this this webinar is, why should a portfolio like myself, portfolio manager like myself add Bitcoin to portfolios that we manage? And I think at the end of the day, if this persists, I mean, if Bitcoin has been the top performing asset class in the world, I believe it's at 11 out of the last, or 12 out of the last 15 years or something like that. It is the top performing asset class most years. That if I don't put Bitcoin into clients' portfolios, I will underperform. If I do put it in, at least I could, maintain purchasing power of that portfolio as Bitcoin continues to rise. I just have to be careful with weight. That it's out that these are weights that people can tolerate, but still participate, in its growth over time. And again, there might be career risk. There was career risk putting Bitcoin in, say, a few years ago for someone like myself. 5, 10 years out from now, there might be career risk if I don't. And I simply just don't do as well as what one would consider average or typical for anyone that does have it. Do you have anything to add to that? But that's just the way I think about it as a portfolio manager.
Yeah, I think increasingly people are looking at it, and I think actually people are looking around saying, people understand they need to diversify across different asset classes. Um, there's one of the plagues in the market recently has been the how narrow the leadership has been, right? Everybody's heard of the Magnificent Seven, and the rest of the market has not kept up. So diversification in and of itself is not enough. You need to diversify into other assets that are also moving in the direction that you want to go. Bitcoin has at times been correlated to the market on the short-term basis, like we saw in 2021, big bull market in Bitcoin, big bull market in equities. But more recently, the correlation has dropped, and it's quite an uncorrelated asset class. You've seen all-time highs across equities throughout this summer, and the price of Bitcoin's gone sideways. And that lack of correlation, I think, is an important element in helping to build better portfolios. When you have multiple assets that have upside expectancy, but move in a different pattern, those are the ingredients that make a great portfolio. And so, I think that's what portfolio managers these days are thinking about, increasingly using Bitcoin as a diversifier that will enhance their returns over time, but also help them have that benefit of diversification to reduce volatility.
Exactly, and not be a one-trick pony. Basically, I don't know, bet the farm, so to speak, on one asset class or one type of investment strategy, but to have a multitude of different strategies that work well together through correlation, so that they're not all correlated in the same manner, that they're different, probably as close to zero correlation as possible, although that's often difficult to achieve.